You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson from WallStreetWindow.com. Merry Christmas, Mike.
Oh, thank you. It's great to talk with you. Thanks a lot.
Taking a look back over the year, everybody remembers Black Monday, August 24th. Would that kind of be the highlight or low light of the year?
Well, it's when it comes to the stock market, it pretty much seems to be, in a way, the only thing that happened this year, because the stock market has basically been in such a narrow range. It's barely up or down for the year at the moment. The other week it was up 1.5%, and at the beginning of this week it was down about 2%, and now it's just almost about even, and we'll see where it finally ends at the end of the year. And for most people, they came into this year with high expectations and high hopes when we think where we were a year ago, because what had happened was, beginning in 2013, the stock market just took off and went up at a 45-degree angle for 2 years without ever stopping or pulling back. It never even fell 10% until it hit a speed bump in October of 2014 and then dumped. But then it recovered by the end of the year. So people had the mindset that, well, it's just going to continue like it did the past 2 years. And what tends to happen to people, the average person just sees the market action day by day. They see the Dow up or down, or the NASDAQ, whichever index they're following, and they kind of have a limited memory. It's what's happened and taken place in the past 6 months that really makes them feel that's what they're being involved in and expect to happen going forward. So because of the past 2 years, 2013 and 14, they were very excited. But when 2015 came, it didn't happen. The market didn't go up like it did in the past, and instead it's done nothing. It's just gone sideways, and nothing's happened except that day, that Monday, where the market really dumped. But then, of course, it came back really hard in October, and since then it's just kind of not doing anything either. It's barely where it was at the beginning of November.
I'm wondering, the Fed hiked interest rates for the first time in 9 years just a few weeks ago to 0.25% from zero. Are they going to be able to continue to raise interest rates?
Well, that's the big question, because, as I said, people, including the Fed, people in general, it's just human nature, they tend to think that current conditions were going to continue forever. So when it comes to the individual investor, since the market hasn't done anything, really, they're kind of falling asleep, and they're not really paying as much attention. I can look at search engine statistics, how many times people type in the stock market, and it's going down because the people are generally just asleep. And they're not excited because they're not making lots of money. The stocks aren't going up, but they're not crashing to scare them either. And then when it comes to the Fed, now the Fed is predicting that it's going to raise rates 4 times in 2016. When it had its meeting last week, it released, they call it a dot plot. It's a piece of paper of a bunch of dots and trying to predict which months it's going to raise rates and projecting way out into 4 years in the future, which is pretty amazing if they can predict that well, because what I've seen in my life is predictions they make don't come true. Many times in the past couple of years they predicted raising rates and got scared and weren't able to do it when the market would drop or the economy would turn down for a quarter or two. So the bottom line is they're projecting 4 rate hikes. Now, what we've witnessed the past couple of months when it comes to the Fed's really interesting, because back in July they were saying they're going to raise rates in September, and then when that Monday in August came, that scared them, and they said in September, well, we can't raise rates now, and so they waited all the way to December to do it just because of that little tumble that happened. So if the market goes down at all in 2016, it'll throw their whole prediction map out the window, and they probably won't raise rates, or they'll hold off, or they'll do it once, or just not do it, or even lower them, who knows what. It really depends on what the stock market does, and the Fed really doesn't have control over that as much as people think they do. So it's just basically they're at the mercy of stock prices. If the S&P stays above 2,000, they'll do it. But I don't think that's going to be the case, because I believe that even though I keep saying nothing's happened, I think something very significant has actually happened, and we've spoken about it on your show many times, and that's the fact that the internals of the stock market have disintegrated. And that's what happens at the end of a bull market or beginning of a bear market. What that means is that when you have a healthy bull market, lots of stocks are going up, and you can pretty much just buy anything almost when times are really exciting, like they were in 2013 and 2014. But when you get at the end or at the start of a bear market, it's only a few stocks that keep going higher, and most stocks actually start to drop or go down. And that's what we've witnessed in the stock market this year. Most stocks are way below their 200-day moving averages. That actually trend was at the beginning of the year where most stocks were below them, but it's just gotten worse and worse. And many stocks are deep in bear markets, down 20% off their highs, and it's just a few stocks. You know, if you look at the S&P 500, you've got like Google, Amazon, Facebook, and Netflix. And in fact, CNBC is now calling these FANG stocks and saying these are the big stocks to play now because they're the only thing going up. They're the only thing that they can talk about on fast money because it's the only place where the action is. But in the Dow, there's also a few high flyers. And today something fascinating happened because the biggest remaining stock in the Dow that's at a new high and not trading at a low like IBM or Walmart and Caterpillar and so many of the others are, but one of the few trading at a high is Nike. And it reported earnings yesterday that the headline number beat earnings estimates, and CNBC and the Wall Street Journal and everyone went crazy because they beat the lower the earnings estimates, but they missed on the revenue prediction, which is kind of interesting. The company didn't make as much revenue as people expected, but still managed to make more earnings. It was a financial gimmick, and it caused the stock to gap up to a new all-time high. I saw before the market opened today so many people on television excited about that, cheerleading the stock, and then it opened up 4%, but then ended the day down 2% on the biggest trading volume day that stock's ever had. And again, that's the kind of stuff you see at topping markets. When you see one of the few remaining glamour stocks, gap up and fall in the highest volume ever, you better, it's a crack, it's a warning, and next year I think all the things we've talked about are going to knock the market down, and then the Fed, they're not going to raise rates 4 times.
Well, everybody grew up with the saying, buy low, sell high, and yet you said all these people are going after Nike stock. I think they've bought themselves a bunch of platform running shoes. Sooner or later, you're going to fall and fall bad.
Yeah, it's a good way to put it, and it's what they bought themselves today. They bought on the open because they're down 6%. Because it gapped up 4% and finished down 2%. So anyone who bought has got a 6% loss just like that.
What's going to happen, do you think, with gold and silver in the new year?
Well, gold and silver, I think, are going to be the big winners of 2016. Now, when we last spoke, it was before the Fed meeting, and I was saying that I thought they would rally at the end of the year. Now, at the last Fed meeting in November, they made a top. The gold topped out around 1190, and then made a new low, and then bounced back up. The gold stocks didn't fall that much, so they stabilized into the Fed meeting, and I thought that they would rally afterwards, but instead they rallied for an hour or two. Then the next day, gold retested the low. Then the stocks fell down too, but then they bounced back up again, and they're just kind of floating around. So that initial move down really scared a lot of people because they were worried that, oh no, it's going to fall like it did in November, or so many of the other drops they've seen since 2011 for that matter. And it didn't. It just fell a day and then kind of bottomed out, and it looks, so I think it looks fine. It didn't rally as strongly as I thought it would, right after the Fed meeting, but I just think it's drifting around and should break out either at the end of this year still or in January and just take off. I mean, we need gold basically to get above 1,000, or above 1,100, I mean, and it should really have a really good rally, and same thing with the gold stocks. They go through the high this month, and they should take off too. And I'm not sure if it's going to do it next week or in January, but I think there's good things to look forward to. And because then if they take out the November highs, it's just going to be a new bull market because they'll be doing something they haven't done since 2011, and that's both gold and the mining stocks going to the previous intermediate term high. And the question is, what's the catalyst that can make that happen? And I think it's going to be the Fed not being as hawkish as people think on raising rates, or not raising rates at all for that matter. And that would mean the stock market dropping, which would trigger the Fed into changing its language about interest rates. So in a way, I think gold could end up becoming a counter trade to the stock market, because a falling stock market now, even if it's just a correction like we saw in August, 10 or 15, 20% from the high, just something of that size would cause the Fed to not raise rates and change what it's saying. That's what they did in 2011. The market fell like 15%, and then they started a money printing operation right off the bat. That's all it takes. And the stocks are in a position to do that next year. So gold's kind of a counter trade to the stock market.
We'll have more with Mike Swanson right after the break.
Unbelievable harmonies, spectacular performance, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. Bird Dog and the Vintage Electric Band, Saturday, January 9th at the Alex Goulden Hall. Buy online and save at ontourtickets.com. See singing impressionist Andre Philippe Gagnon.
And I think to myself,
in Oliver, December 29th. In Kelowna, December 30th. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Mike Swanson. Mike, crude oil has been a disaster in 2015. Do you think things will pick up in the oil patch?
Not immediately, but I do think sometime next year we'll probably see a bottom. The thing is, I'm really interested in investing there, buying oil stocks. I mean, in the long run, they're great things to buy. They pay dividends, and we all use gas. But inside the futures market in 2014, in the summer before the stocks got smashed and oil dropped, inside that futures market, something historic happened. There's the largest short position ever built by commercial traders. These are the large operators in the market, the Saudis for that matter, but people who, ship oil or pump it out of the ground. They use the futures market to hedge. And they tend to be the smart money in the market, and they had created the biggest futures short position against oil in the summer of 2014, and oil cracked. So the Saudis and whoever was in on it, they fully hedged themselves, and they haven't yet eliminated half their hedge. So to me, I don't think that means oil is going to crash or something, but to me, it tells me that the smart money, so to speak, the commercials are still net short, and they may have another year before they fully get out of their position. It doesn't mean oil has to drop month by month or something, but it just like, a lot of times the market will bottom out and take a year of going sideways before it goes up, form a long base or something like that. So I think that's likely to be the case with oil. And the oil stocks, I think are very vulnerable to the stock market falling, because a lot of them have not reduced their dividends yet, even though they're making less money. And a lot of them do have debt issues with their bonds because they're not profitable at this price for oil. A lot of the American fracking companies and companies on the margins, so they can still drop even if oil doesn't drop. So I think they're at the mercy of the stock market, and we get a good stock market drop, maybe then there'll be a good buy.
What stock market was the hottest this year? I just finished talking to somebody who told me the Russian stock market was pretty good, and you've talked about Russia as well.
Yeah, the Russian stock market was in a bear market, and then in 2013, actually for a couple of years, and then around this time, November, December of 2014, it crashed. They had their currency blow up, and that crash marked the bottom, and it surged. It almost doubled in price, and you can invest there using the RSX ETF, trades in the United States. But it's basically gone sideways all year long. It hasn't really gone up since that big move last year in December, and it's not falling, but it's not going up either. But I think it's going to be people could buy it now, average in now or whatever, but I think it's a good candidate for a market to take off by the end of next year, maybe the second half of next year. If we do see the stock market in the United States decline, and something like the Russian stock market could just sit there and just go sideways as that's happening, that would be something to look for to put some money into, because things that hold up during a decline, they tend to lead afterwards. So I think that's something to watch next year. And actually, I think that may be the most interesting foreign market to invest in.
As long as you can get money in and out.
Yeah, well, I don't think anything like what happened in Greece is going to happen there, or Cyprus that we saw the year before. But it's an interesting situation that the whole world is in. 2008 we saw this banking crisis in the United States, and I do think we have debt problems, but I don't think anything of that magnitude is going to take place on Wall Street with the banks or anything like that next year, the government or something. It's just more things run their course, and you do get there are imbalances in the corporate debt market. There's been a lot of talk the past couple of weeks of junk bonds, how they've dropped in price or started to, I think. But that's not going to cause some giant global crisis or something next year. I
mean, people point out how much money is invested in junk bonds, but they're not all going to go under at one time, even if they did have a failure. No. The real problem isn't the bonds going under or not getting your money. The real problem with the market or the financial system in the United States, the biggest problem right now, maybe more problems will appear when we're talking a year from now, but right at the moment, the biggest problem is that a lot of these companies have used debt in order to buy back stock over the past 3 years, and they've gone into debt to do it because their revenue streams have been shrinking. They're not making as much money, and some of them are barely even doing capital investments. So what this has done is, by buying shares back from, they're out in the stock market, they reduce the shares outstanding, and because Wall Street calculates earnings by your shares outstanding, by taking shares outstanding out of the stock market, it increases earnings. So that's why I was chuckling a little while ago about Nike. They didn't beat revenue estimates, but they beat earnings. The reason why is because of these share buybacks. Now, these share buybacks have really fueled the bull market during the past couple of years, but if a company gets so over-debted or interest rates go up and they can't borrow the money they were borrowing, then they can't do the buybacks they were doing, then they're a buyer out of the market, and if that's the only thing that's really helped the stock market out this year, which it is, then that's a big problem, and the stock's going to drop. That's the big problem right now, is if you reduce the buybacks, then the stock market is going to run out of fuel and just fall. And that's what we're facing, because these junk bonds have already dropped a bit just the past couple of weeks. So that makes the cost for companies to borrow money go up, and they just aren't going to take, most
CEOs aren't going to just risk all their business on let's just borrow more and more and more. At some point they'll stop. And I suspect that they may have gone a little bit crazy, let's say, in the past couple months, because they know this and they want to get out. They issued lots of buybacks this year, I think, just to boost the stock price in the end of the year, so they get some gravy train bonuses and do some cashing out. And not only that, but they've actually done a lot of insider selling in the past couple months too. In fact, November, I was just reading, was the fourth largest month of insider selling in the United States stock market ever. And I was looking at some of the companies, and just to use one example, Apple, which everyone loves Apple. Apple is supposed to be the stock you must own, and if you don't own it, then you're crazy. Well, the insiders for Apple, including the CEO, have liquidated 17% of the shares that they own in the past 6 months. So the people, they're getting out. They're not telling you that on TV, and they're not going to make a big deal out of it. In fact, you talked about that Monday day when the market gapped down. The CEO of Apple sold some crazy amount of shares that week, or going into that day. It's something like 30 or 50 million. And then Tuesday morning, Cramer read an email on the air before the market opened from the CEO of Apple saying that their China business was about to take off and boom, and everything was just rosy. So the CEO dumped millions and millions of dollars worth of stock, wrote an email to Cramer of Bull Talk, and Cramer read it. And what's happened with Apple is it's still not any higher today than it was on that day when the email was read, and they've been liquidating more shares. So that's the reality of what's happening that people don't know. But all they know is they turn on the TV, they see the Dow up or down, they may hear something about a headline for 5 minutes, but what can they tell you in 5 minutes, and what do they want to tell you in 5 minutes? But the reality is a lot of people are cashing out.
They just don't want you to know. Mike?
No, not really.
Yeah, I was going to say Apple rotten to the core. Maybe it's just a humorous comment. It's not a thing. Please don't sue me, Mr. Apple.
I mean, it's interesting. It's not the company it was, and I say this, and I'm talking to you with an iPhone, so using one on my ear here, talking to you and saying this kind of stuff. But it isn't the company that it was. The iPhone is the reason why. The iPhone drove the sales of the past couple of years. It was the hot item, and they haven't created a new hot item that can capture the imagination of the masses and get them to just run to the store and buy something. Like, I don't know anyone running to the store to buy iPhones or iPads right now. Everyone I know that has one already bought one, and I don't feel myself like I have some need to go buy the next upgrade. I know what that game is. I know it's just about getting me to buy something, and I don't care. Maybe some the real hardcore Apple people do, but they're kind of silly to be caught up in some sort of trick like that, and it doesn't even matter. They need something new.
I suspect everything that Apple has brought out was a product of Steve Jobs, and after his death, they're rummaging through his desk looking for the ideas he had left behind, and then once those are gone, do they have anything else in mind?
I don't know. That's the good question. Is the desk empty? I heard a couple months ago that they wanted to make an Apple car that would run on electricity, kind of like the Tesla car or something. Well, look what Tesla is. It's kind of a disaster stock at this point. And these electric cars like that are so expensive. And then someone told me they were thinking of making a driverless car. Well, I'm not going to get one of those as long as I can help it, unless the government makes it a crime not to be in one. I'm not getting one. I'm just not going to do it, But so I don't think that's something that's going to. I mean, if I'm scared to do it, I think everyone else is too. I don't think people are going to run to buy that, and it's probably so expensive. To me, it sounds like a gimmick. Like, oh, we're going to make cars. It's like me saying, I got a website, financial advice, and I'm going to start one about, I don't know, something how to make a lemonade stand or something. I don't know, something really strange.
Well, at least Apple makes physical products, but if you take a look at Google, they're all just metaphysical. They don't have anything physical there, and now they're going to get into making a product?
Yeah.
They've never done that before.
No. Well, we'll see how it works out, too. Well, maybe that's why they split themselves up. They changed their name, and it starts to get confusing what's going on. But it's a stock, too, that's one of the so-called FANG stocks. You know, it's the G at the end of FANG, and it's gone straight up. And, I mean, if you just watch Facebook, Amazon, Netflix, Google, these are the 5 stocks that have enabled the stock market to be close to even at the moment. Maybe it will finish the year in the green. If it does that, it's because of those stocks. But you just watch them. If they start to drop, then you know it's all over.
Well, you'll remember.
I
was going to say you'll remember the fiasco with the map system with Apple. If they have a car made by Apple, is it going to drive me into the river because the map isn't correct?
Well, that's why I'm not getting in one of these driverless vehicles that go by themselves.
Well, Mike, I think it's going to be a very interesting year going forward. We always are surprised at the predictions that we make, that sometimes they come true, but it's the stuff that we don't predict that always comes up and bites us, isn't it?
Yeah, that's true. There's always a surprise somewhere. And, you know, for most people, I don't know if, I don't think people feel surprised or alarmed right now. They're more probably just like, well, it didn't do what I thought it was going up and making me rich. But I think the surprise next year will be for the gold and silver people as far as that goes.
Well, they've been bullish for the last 2 years and nothing has happened. They deserve to have something happen finally.
Yeah, that's right. Well, that's another lesson of financial markets. What do you want to do? Do you want to invest or be a momentum type chasing person or trader, to put it in a better way? And if you're going to do one or the other, you need to find a method that allows you to stick with that. So I'm someone that has owned gold stocks now. I've traded them off and on over the years, of course, but I've got a position now that I've actually owned for over a year, and the way I've been able to do that is by not having a giant position that makes it so I can't sleep at night or something. And I just watched it go up and down, and so forth. And if you want to invest, I think that's the way to do it. So like you were asking about the oil stocks a little while ago, I actually had someone call me yesterday asking me if they should buy oil stocks, and I know they want to buy them, and I just said, look, I can't predict when they're going to bottom. I don't think they bottomed here, but I do think they'll go up eventually. So just buy a little bit every month and just average in, and, you know, that's your position. So that's what I told him, and that's the key to investing, is doing something that allows you to hold and sleep at night too. With the momentum trading, you've got to be willing to get off, and if you're never willing to get off, it's one day going to crush you, and that's the position I think the stock market people are in at the moment, that are just chasing these 5 stocks. And truth be told, I mean, most stocks this year have declined, so the momentum chasers have really had a tough year.
Mike,
there hasn't been much momentum.
Mike, have a great New Year and a happy Christmas.
Thank you. It's great talking with you as always.
My guest has been Mike Swanson from WallStreetWindow.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard. Merry Christmas, everybody.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.